Hi guys, my name is Steve and welcome to Disruptive Wealth Creation. Today we are looking at Alibaba, its business model and the pros and cons of investing in Alibaba. If you're new to this channel, welcome. If you have visited us before, welcome back again. The question we are asking is Alibaba undervalued or overvalued as a company? Alibaba was founded on the 28th of June 1999 in Hangzhou, China by Jack Ma with 17 other people. The name comes from the Middle Eastern folk tale. It happened when Jack Ma visited a coffee shop and he asked a waitress, he said to her, "Do you know Alibaba?" And she says, "Yes, open sesame." Jack Ma then went and asked a few more people in the coffee shop from different countries whether they knew Alibaba, and they all said the same. Yes, they knew Alibaba. So Jack Ma realized that Alibaba was a global name. It was a name that was easy to spell and that he would use it for his company. On the 19th of September 2014, Alibaba's initial IPO in New York raised $25 billion US, giving the market company of a value of $231 billion, by far the largest IPO in world history. Alibaba is one of the top 10 most valuable corporations and it's 31st largest public company in the world, according to Forbes Global 2000. So how would you describe Alibaba? Is it like Amazon? No, it's more like eBay. Alibaba does not have any warehouses or inventory. Instead, it has software platforms that facilitate the exchange of goods and services. This gives it greater operating and profit margins. It brings buyers and sellers together without touching any merchandise, because Alibaba does not pack any merchandise and it does not deliver any merchandise to customers. Alibaba is basically comprised of three core businesses: Alibaba, Taobao, and Tmall. The first one is Alibaba, which is the trading platform that connects manufacturers and wholesalers with buyers from around the world. Alibaba makes its revenue by charging merchants an annual fee and sales commissions for using its site. Alibaba also offers a limited number of products for free, but then offers merchants an option to pay to get greater exposure on the website. The second core business Alibaba has is with Taobao, which means in Chinese, search for treasure. It is China's largest shopping website and lists hundreds of millions of products and services from millions of sellers. It is a business-to-consumer website. The site is free to join, but Alibaba makes its revenue from Taobao through advertising fees paid by merchants. The third core business of Alibaba is Tmall.com. This company caters to small merchants and individual sellers who target the middle class, offering branded goods like Nike and Apple. In 2009, they had a Singles Day, similar to our Black Friday promotions in the UK and US. With Tmall, Alibaba collects its revenue from the transaction fees from third-party merchants. What gives Alibaba the edge is that it does not allow Baidu, which is China's equivalent of Google, the ability to put content from Taobao and Tmall on their website. Therefore, shoppers have to go directly to the Alibaba websites for their merchandise, and this increases their search value. Alibaba also has other services within its ecosystem that complement it. One of them, for example, is Alipay. Alipay is basically Alibaba's version of PayPal. It provides payments and services for all its transactions. Another service Alibaba has is called Alimama, which is an online marketing platform for its sellers. and it generates income from that. So what are the pros and cons of investing in Alibaba? Well, let's see, first of all, let's have a look at Jack Ma's speech at the Shanghai Bund Summit in 2020. Many people who heard it applauded it and said it was good. And the official line was that he said the right things, but he was the wrong person to say it. Much of what Jack Ma said has or is being implemented now. After the speech, Jack Ma disappeared for about 6 months. And to be fair, his life was not in any danger. The speech was delivered the day after it listed its Alipay mobile app for IPO in Shanghai and Hong Kong. As a result of that speech, that did not happen. And the spin-off basically affected Alibaba's stock price. Then in April 2021, Alibaba got fined $2.8 billion as part of a Chinese crackdown on big tech companies, being ordered to pay the money and also to file self-examination compliance reports for anti-competitive practices for the next 3 years. Although this might sound draconian, the US government is looking at Amazon and other tech companies in the US over its monopolies structure and what it regards as unfair competition. One factor that has not helped Alibaba is the trade war between USA and China, which has been going on now for 4 years. With a change of administration, hopefully there will be less showmanship, rhetoric, and gameplay, and more groundwork done to resolve any issues under Biden. The USA could be Alibaba's biggest world market if they can work it out. If it doesn't work out, then Alibaba will just concentrate more on Asia and Europe. This could be a good year for Alibaba as China's economy starts to recover. It is adding new revenue streams. It's not just an e-commerce company, but it's now a cloud company and a media company. Internet penetration, per capita income and consumer spending is also increasing in China. And Southeast Asia is expanding its digital technology, which is good news for Alibaba. Alibaba controls about 60% of China's e-commerce market, which is expanding. And Alibaba's fundamentals are as strong as ever. And Alibaba's profit margins are improving year on year. The stock is an attractive price and Wall Street is bullish on Alibaba. If we look at the last 12 months, the stock has a lot of potential to go up. Let me know in the comments below what you think. Is Alibaba undervalued or overvalued? The next video will be on Tuesday and it will be about 3D printing with Manos from Money, Whiskey and Coffee. So make sure you don't miss it and see you soon.